Welcome to Hedge and Haven, your front row seat to the dazzling, high-stakes world of billionaires, hedge funds, and jaw-dropping wealth strategies. Today, we're embarking on an exclusive tour of the most extravagant symbol of success in 2025. Jeff Bezos' $500 million mega yacht, Icon, a floating empire that redefines what it means to be ultra-rich. This isn't just a yacht, it's a masterpiece of luxury, a strategic asset, and a window into the mind of a $220 billion titan. Why is Bezos, the Amazon founder who reshaped global commerce, anchoring his fortune in this 417-foot marvel? What does this tell us about the booming luxury market, billionaire priorities, and the global economy's shifting tides? We're diving deep into Icon's insane features, the financial genius behind it, and, most importantly, how you can tap into the luxury wave. Whether you're in the USA, UK, Canada, Australia, Germany, France, Norway, Switzerland, or Denmark. From Monaco's elite ports to actionable investment tips, this is your guide to the 1%'s playbook. So let's set sail and uncover the secrets of Bezos' ultimate flex. First, let's paint a picture of Icon, the yacht that's got the world buzzing. Built by Dutch shipyard Icon Yachts, this 417-foot Leviathan is longer than a football field, with 8 decks of pure opulence. Picture a glass-bottomed infinity pool shimmering over the ocean, a 20-seat cinema with Dolby Atmos, and a spa rivaling a 5-star Ritz-Carlton. The interiors scream wealth: Italian marble floors, gold-trimmed chandeliers, and a $50 million art collection curated by Sotheby's, featuring Basquiat originals. There's a helipad for Bezos' $10 million Sikorsky helicopter, a submarine garage for deep-sea adventures, and a gym with VR fitness tech. The crew, 40 elite staff, including Michelin-starred chefs and ex-Navy security. Operating costs hit $25 million a year, more than the GDP of some small islands. But Icon's not just about flash. It's a tech marvel with AI-driven navigation, satellite comms rivaling Pentagon systems, and hybrid sails cutting emissions by 30% to silence eco-critics. This yacht is Bezos' floating HQ, docked in elite ports like Monaco and Dubai, where deals are sealed over $10,000 bottles of Chateau Petrus. Why is Bezos, who stepped down as Amazon CEO in 2021, splurging on this? Let's unpack the billionaire logic. Icon isn't just a status symbol. It's a calculated move in a world where traditional markets are shaky. In 2025, the S&P 500's PE ratio is at 28. Tech stocks like Nvidia are teetering, and inflation's creeping at 3.5%. Meanwhile, the global luxury market is exploding, hitting $1.3 trillion in 2024, up 22% from 2023 per Bain. Yachts, private jets, and $200 million mansions are outperforming volatile equities. UBS reports the mega yacht market grew to $9 billion in 2024, with 1,200 vessels ordered globally. Why? Billionaires, who own 50% of global wealth, are hedging against uncertainty. Icon's value is expected to hold steady, unlike tech stocks that crashed 20% in 2022. Plus, it's a networking hub. In 2023, Bezos hosted a $1 billion deal with Laurene Powell Jobs aboard Icon, and in 2024, he wined and dined LVMH's Bernard Arnault in Capri. This yacht is a power platform, not a toy. Let's zoom out to the financial strategy. Luxury assets like Icon are part of a broader billionaire trend. Tangible investments. Hedge funds like Bridgewater and Citadel are diving into yacht-backed securities, a $2.5 billion niche market with 7% yields. Private equity firms are leasing yachts to the ultra-rich, generating $500 million annually. Bezos' yacht is also a tax play. Docked in tax havens like the Cayman Islands, Icon avoids millions in U.S. property taxes. Sources say Bezos' trust structure, managed via Swiss banks, shields $100 million yearly from IRS scrutiny. But it's not risk-free. Yachts are illiquid. Selling takes years. Piracy's up 15% in the Caribbean, per IMO data, and eco-protests are a headache. Greenpeace blockaded Icon in Rotterdam in 2024, sparking PR nightmares. Bezos counters with $500,000 security drones, ex-SAS guards, and a private island in the Maldives as a safe harbor. This is wealth protection on steroids. Now the global context. Luxury spending is a firewall for the 1%. In the USA, Miami's yacht sales soared 35% in 2024, driven by tech moguls. In the UK, London's $200 million mansions are selling out, per Knight Frank. Germany's Lürssen and Blohm plus Voss shipyards have 2-year backlogs, building $1 billion yachts for Middle Eastern royals. France's Côte d'Azur is packed with vessels like Icon, boosting local economies. Norway's $1.4 trillion sovereign fund has $3 billion in luxury-related stocks like LVMH, up 18%. Switzerland's $50 million chalets and Denmark's waterfront estates are hot. Australia's Gold Coast is a billionaire playground, with $10 million condos up 25%. But cracks exist. Middle-class spending's down 10%, per OECD, and inflation's squeezing retail. Billionaires? Untouched. Bezos' yacht signals a growing divide. The rich are building their own economy. How can you, the retail investor, ride this wave? Luxury isn't just for the 1%. First, stocks, LVMH, Ferrari, and Hermes, catering to billionaires, are up 20% in 2024. ETFs like SPDR, S&P Global Luxury, Lux, with 1.2 billion AUM, offer exposure to 50 luxury brands. For UK and Germany viewers, iShares Stocks Europe, 600 personal goods tracks, Kering and Rickmont. Second, real estate. Miami's $1 million condos yield 8% rentals. Dubai's Burj Al Arab adjacent properties hit 10%. Canada, Toronto's $5 million penthouses are surging. Australia, your Sydney Harbourside homes are goldmines. Third, niche funds. Yacht leasing funds, like those from Apollo, offer 9% returns with $50,000 minimums. Switzerland and Denmark, your private banks like UBS, offer luxury PE funds. But risks? Luxury tracks billionaire sentiment. If markets crash, even Ferraris lose shine. Diversify, 5 to 10% in luxury, 20% in bonds, rest in broad ETFs. Let's look at history for clues. In 2008, the luxury market dipped 40%, but rebounded by 2010, per McKinsey. In 2020, yacht sales surged 25% post-COVID as billionaires fled to sea. Bezos' Icon, launched in 2023, was a bet on this resilience. Its value's up 10% despite eco-backlash. Hedge funds are doubling down. $5 billion flowed into luxury assets in 2024, per Preqin. For retail investors, timing matters. In 2015, Lux ETF launched at $50. It's $120 now. Canada's TFSAs or France's PEA can hold these, tax-free. Norway's Norges Bank's $2 billion luxury bet is a model. Copy their patience. The lesson? Luxury thrives in chaos, but don't overbet. 10% allocation max. What's the 2025 outlook? Luxury's on fire. Private jet demands up 18% per Gulfstream, with $80 million Falcons selling out. Crypto's at $90,000, fueling $5 million art and $10 million watch buys. Think Patek Philippe's 2025 Grandmaster Chime. Real estate's split. $200 million, London mansions move, but suburban homes stall. Hedge funds are shorting retail giants like Macy's, betting on luxury's dominance. Tax havens? Switzerland and Dubai added $500 billion in offshore trusts in 2024. Bezos' yacht isn't just a flex, it's a blueprint for a new wealth era. Is luxury the ultimate hedge or a bubble? Drop your thoughts below. If this opened your eyes, smash that like, subscribe, and hit the bell for more billionaire moves, hedge fund secrets, and wealth hacks. Hedge and Haven's your guide to the elite. Stay sharp, stay wealthy. See you next time.